Well, let's talk now to Kevin Leung, who's Sustainable Finance Analyst at the global think tank Institute for Energy Economics and Financial Analysis. Welcome, Kevin. Good to see you. So this new Green Deal, welcome. The new Green Deal being brought in by Europe, designed to boost efficiency, but it is actually going to make companies less accountable for missing green targets. So is it really a get-out clause, allowing them to swerve their climate commitments?
So when we look at the Green Industrial Deal that's announced today, we look at the climate targets, climate goals, going hand in hand in economic competitiveness, being integrated into one cohesive strategy, and that's reassuring to see to start with. And it's quite become clear that they recognize that cost of inaction is higher than cost of action when it comes to climate change in Europe. But then it's also important to note that energy transition is central to all this. So from our point of view, we don't see every solutions can actually be viable to support the EU climate goals. For example, based on our analysis, we saw gas demand has already come down over the last few years, and there's at the same time continued investment in LNG infrastructure. We see that the role of LNG being a transition power in the power mix is quite limited, and in fact, it has contributed to price volatility.
Well, let's talk about one company which is reversing the energy transition, if you like. That's BP. It's announced a switch in its strategy to move away from renewables, putting more money back into oil and gas. What do you make of that decision?
So as we know, BP faces a new active investor, but probably in general, market pressures from shareholders to boost short-term profitability and to return those profits to them. And also, the macroeconomic conditions as well. But at the same time, I guess bear in mind that the energy transition is a mega trend, it's a structural trend, and not just in Europe, but around the world as well. So long-term investors, and in particular not just shareholders, also bondholders, currently staying put, but then potentially also very much scrutinizing this pivot, whether or not it's in line with their investment mandate, and particularly for those investors who are long-term minded, who are to provide a long-term stable returns to fulfill their fiduciary duty.
Thank you very much indeed for coming on the programme. Kevin Leung from the Institute for Energy Economics and Financial Analysis.